our Monday and take our blues away. It's time for our Monday special Midcap Mania with Nigel D'Souza. And the stock on his radar is an auto ancillary stock whose key clients include M&M and Tata Motors. Nigel, take it away.
Well, Sonia, you know, it's from the space that you track very closely, auto ancillary space. Rather small company, it's known as Sharda Motors, only 700 crores in terms of market capitalization. Now, it's been a big mover if you take a look at it from the lows earlier this year. But just in the last month or so, it's corrected closer on 20% from the top. The first quarter numbers look very good. That's something that impressed me. We had a top line growth of around 14%. The margins as well expanded by around 250 basis points. And profitability did balloon up because the operating profit was good and their finance costs as well have dipped by closer around 45% if you take a look at it on a year-on-year basis. So in the first quarter, they have achieved closer around 37% of what they did in the entire of last year in terms of an EPS. And you just try to, annualize that EPS. Let's get the EPS number really up for you on the screen. You try to annualize that. It comes to roughly around 80 rupees per share. So it's not very cheap because it's trading at around 14 to around 15 times or thereabouts. What exactly is, so that's fairly important as well. That's the debt number that came up for you on the screen. In the last couple of years, the debt has reduced from around 180 crores all the way down to around 60 crores approximately. That's the EPS number really that we are talking about. In the first quarter, they've achieved closer on 37% of what they did in the entire year. And the stock trades at around 15 times if you analyze that. Just taking a look at what exactly is their revenue breakup. Their main revenue comes in from suspension, silence, as well as exhaust pipes. That's a good 68%. And it's a group company of Bharat Seats. So there as well, the car seats frame contributes closer around 27% approximately. The clientele as well looks fairly good because a lot of big names are in there. We have the likes of Hyundai, Mahindra, as well as even Tata Motors is one of their clients. So that clientele looks quite good as well. They are exclusive suppliers for the Mahindra and Mahindra Scorpio as well as the Xylo. So that's fairly interesting. And if you take a look at it, even in terms of their independent front suspension over there as well, they are either preferred suppliers or in fact they're the only suppliers for some of these products. Their technical collaboration with a couple of big companies, that's international names, the Belgium-based company Bosal, over there they do have a JV that's taking place over there. And even Ricardo PLC, that's a UK-based company, they're going to be setting up an R&D facility in India in the next 5 years. This I've got it from the audit report itself. And also there's another Korean company, that's Sejong, over there as well. They do have a technical collaboration. So a lot of global names that they're looking at in terms of technical collaboration. Their dividend payout as well has been fairly good. So they've been paying close to around 20 to around 40% in terms of the dividend payout ratio. Interesting stock, auto ancillary, had a good first quarter. Maybe one worry could be they're getting most of their revenues coming in from Tata Motors as well as Mahindra and Mahindra. So maybe, in fact, that's something that you should look at. But let's see how the rest of the year turns out. For the first quarter, it looked quite good.
Okay, Nigel.